Ever wonder who's really calling the shots in the world of finance? Well, get ready, because today we're diving headfirst into the fascinating and, let's be honest, sometimes kind of mysterious world of investment banking.
And believe me, it's not all high stakes trading floors and yelling like you see in the movies. Well, okay, maybe there's a little of that, but there's a whole lot more to it.
That's what I'm really curious about, what goes on behind the scenes in this world. We're taking a deep dive into the Wikipedia article on investment banking today to try and figure that out. So no hot stock tips here, just trying to get a grip on what this industry actually does.
Makes sense. To sum it up, think of investment banks like financial matchmakers. They connect the folks with all the cash, big companies, governments, you name it, with those who need an infusion of funds to grow or, make big moves.
Okay, makes sense. But how does that actually work? It's not like they're just handing out loans at the bank.
You're catching on quick. Yeah, it's not about taking deposits. Investment banks make their money through fees for all sorts of services they provide. A big one is helping companies raise capital. Imagine a company wants to go public, IPO time, or maybe they're planning a huge expansion, or even looking to buy out another company. That all takes serious cash.
And that's where they come in.
Exactly. They need a huge amount of money to make it happen, and that's where investment banks step in to save the day.
So they're like financial advisors for these major money moves.
Spot on. They're the advisors, the strategists, the facilitators, guiding companies through these complex financial transactions. Think about a company going public, doing an IPO. The investment bank is the underwriter, the one figuring out the initial price for the stock, navigating all the legal stuff, and connecting the company with investors.
We're talking some serious money here. We've all heard the stories about those massive IPOs that make headlines. So how does the investment bank get paid for all this?
They usually charge a percentage of the capital they helped raise. So say a company rakes in a cool $1 billion through an IPO, the bank might charge, let's say, 7%.
Wait, hold up, 7%. So we're talking a $70 million fee just for one deal.
You got it.
Wow, I see why it's considered such a lucrative career path. But it's not just IPOs, right? What else do they do?
Oh, there's way more. Mergers and acquisitions are huge. You know, those high stakes deals where companies merge or one gobbles up another one. Investment banks are right in the thick of it, figuring out how much everything's worth, hammering out the terms, and making sure those deals happen. And we're not talking chump change here. These deals can involve billions, even trillions of dollars.
Sounds pretty intense.
Yeah.
What kind of person thrives in that environment? Do you need to be like a math genius with nerves of steel?
It definitely takes a certain kind of person to handle the pressure cooker of investment banking. You need a sharp mind, top-notch analytical skills, and you got to be able to work under pressure, sometimes around the clock. But it's not just about crunching numbers all day. You got to be good with people, too. You need excellent communication skills, be able to build relationships and negotiate those big deals, all while navigating the, let's just say, competitive world of high finance.
So it's a mix of brains and social skills.
Exactly. To really wrap your head around how investment banks tick, imagine a well-oiled machine. You've got different teams working together to get things done.
Okay, I like it. Break it down for me. What are the parts of this financial machine?
Think of it in three main parts:
Mhm.
the front office, the middle office, and the back office.
Now you've got me intrigued. What happens in each of those?
The front office, that's where the magic happens. The deal makers, the ones working directly with clients, putting together those multi-million, even billion-dollar deals. They're the ones making headlines, bringing in the big bucks.
So these are the people in the expensive suits, right? The ones closing those massive deals.
You got it. They're the public face of the bank. Then you've got the middle office. They might not get the same recognition as the front office, but they're the unsung heroes. These are the risk managers, the analytical masterminds who keep the bank from going off the rails.
The voice of reason in all the chaos.
Exactly. They scrutinize every deal, analyze the risks, and make sure the bank isn't biting off more than they can chew. They're all about managing different types of risk, like market risk. How will changes in the market affect things? Credit risk. What's the chance someone won't pay back what they owe? And even operational risk. Everything from cyber attacks to plain old human error.
So they're like the safety net, making sure the bank doesn't go belly up. Got it. What about the back office? What's their role?
They're the behind-the-scenes heroes, making sure everything runs smoothly, processing transactions, wrangling all that data, making sure the bank is playing by the rules, all those financial regulations. They're the backbone of the whole operation.
Essential, but underappreciated. Just like the stage crew of a big show.
Yeah.
Right? You don't see them, but nothing works without them. But getting back to those analytical whizzes in the middle office, It sounds like investment banking isn't just for finance people anymore.
You're catching on. It's become incredibly sophisticated, relying on these complex models and algorithms. You'd be surprised how many people working in investment banking, especially in those risk management roles, have backgrounds in fields you might not expect. Physics, computer science, even advanced mathematics, they're all in the mix now.
Hold on, are you telling me someone with a PhD in physics might end up crunching numbers for a bank instead of, researching black holes or something? That's wild. Speaking of changes, let's shift gears and talk about the history of investment banking. It's been around for ages, but how did it become the global powerhouse it is today? It's pretty amazing to think how it's all evolved from those early stock offerings, like you were saying before about the Dutch East India Company.
Yeah, it's a wild ride how it all happened. We started with those small partnerships, mostly focused on underwriting securities. But as markets got more complex, well, so did the banks. They became this one-stop shop for all things high finance, advising on mergers and acquisitions, really digging deep into research on companies and markets, even managing investments for the big players, wealthy individuals and institutions, the whole nine yards.
So how do we go from those small-time partnerships to the giants we see today on Wall Street?
Well, for that, you got to look at history, especially in the US. Regulations, big events, they all played a part. The Glass-Steagall Act, for example, that was a game changer after the Great Depression.
Right, Glass-Steagall always comes up when you read about the crash of '29. But I gotta admit, I'm a little fuzzy on the details. What was the main idea behind it?
To keep things simple, it was meant to separate what your everyday bank does, like taking deposits, giving out loans, the commercial stuff, from the riskier business of investment banking. The whole point was to protect people's savings if a bank decided to gamble on risky investments.
So like a wall between Main Street and Wall Street.
Exactly, and for a good while, it did the trick. But over time, things changed, the financial world got more complicated, and the lines started to blur. Fast forward to the 90s, and suddenly everyone's talking about bringing commercial and investment banking together. Their argument: more competition, more choices for consumers.
And that's where the Gramm-Leach-Bliley Act comes in, right? The one that basically dismantled Glass-Steagall in '99.
Bingo. That was a turning point. Suddenly, we've got universal banks, these massive institutions that could do it all, from checking accounts to handling those billion-dollar IPOs.
Yeah, that's quite the shift. What happened after they took down that wall?
Well, you can imagine a whole wave of mergers and acquisitions. Commercial banks snapping up investment banks and vice versa. These massive financial supermarkets were popping up everywhere, consolidating their power and influence.
Makes you wonder, looking back, if anyone saw the potential downsides, especially considering the 2008 crisis.
Oh yeah, 2008 definitely brought those issues to light. Now, I'm not saying repealing Glass-Steagall caused the crisis, but it played a part. The lines between commercial and investment banking got so blurry that when the housing bubble went bust, the whole system felt it.
Because everything was so interconnected. Fine when times are good, but a recipe for disaster when things go bad.
Exactly. That crisis sparked a huge debate about the role of these banks, whether we needed stricter rules, the whole shebang, conflicts of interest, lack of transparency, too much power in the hands of a few. These were serious concerns.
You mentioned conflicts of interest, and to be honest, that's always been a bit of a head-scratcher for me in the finance world.
It's a valid point. Think about it. Investment banks are involved in so many different activities, and sometimes those activities, well, they clash. Sometimes with each other, sometimes even with what's best for their clients.
Can you give me an example? How would that actually work?
Let's talk IPOs again. Remember how the bank acts as the underwriter, helping companies go public?
Sure, their big debut on the stock market, everyone hoping for a big win.
Right. Now imagine you're the bank handling this IPO. You want the best price for the company's stock, right? Maximize the profit. But you also have these big investors, hedge funds, pension funds. Those are your regular clients.
Well,
And they're looking to buy in low, get a good deal.
I see where you're going with this. Whose side are you on?
Exactly. The bank's caught in the middle. They might be tempted to set a lower IPO price to keep their big investors happy, even if it means the company misses out.
So it's a question of loyalty. Who are they really working for? The company going public or their bottom line and their big investors?
You hit the nail on the head. This tension has led to some pretty big controversies, even lawsuits over the years.
Speaking of controversy, what about that whole etoys.com thing back in the dot-com boom? Wasn't that a case of an investment bank, Goldman Sachs, if I remember right, being accused of manipulating an IPO?
That's the one. eToys.com, that was a big deal. Everyone was watching. Their stock exploded on the first day, which often means the IPO price was too low to begin with.
So some people thought Goldman Sachs, as the underwriter, gave their big investors a sweetheart deal, and eToys.com paid the price.
That was the allegation. It's complicated, lots of factors involved, but it definitely brought the whole conflict of interest issue into the spotlight. And remember, this was before the 2008 meltdown, which just made those concerns even louder.
So after all that, all those scandals, where does investment banking go from here? Did anyone try to clean up the industry?
Well, 2008 was a wake-up call for sure. Suddenly, everyone wants reforms, new regulations, anything to avoid another crisis. That's where the Dodd-Frank Act comes in, back in 2010.
Dodd-Frank? Yeah, I've heard that name. Remind me what that was all about.
It was a monster, this act, hundreds of pages long, changing a whole bunch of stuff in the financial industry. One of the key parts was the Volcker Rule.
Okay, the Volcker Rule, now we're getting into the weeds a bit. What was that supposed to do?
In a nutshell, it was meant to stop banks from making certain kinds of risky trades with their own money, the kind that could bring the whole system down.
So basically putting the brakes on the risk takers.
You got it. But regulations are only part of the story. The world of investment banking never sits still. New tech, market forces, even what investors are looking for, it all keeps changing.
So where do we go from here? What's next for this industry that always seems to be on the edge between innovating and, well, getting regulated?
Right.
What should we be keeping an eye on in the world of investment banking?
Well, one thing that's really interesting is the rise of boutique investment banks.
Boutique investment banks, that's a new one on me. How are they different from those big Wall Street players we've been talking about?
Think of them like, specialized craftsmen compared to, a big factory. They're smaller, more agile, and often laser focused on specific industries or types of deals. They might specialize in, say, tech IPOs, or maybe they're the go-to for mergers and acquisitions in healthcare.
So more like expert consultants giving tailored advice.
Exactly, because they're smaller, they can move faster, adapt to changes in the market more easily, and they often have this deep understanding of their niche, giving their clients more personalized attention.
I bet companies like that, feeling like they're more than just another deal, especially compared to those big banks.
Oh, absolutely. Plus, there's the whole reputation thing. After all the scandals and controversies with some of those bigger banks, some companies, especially those with certain values or in specific industries, well, they're looking for someone with a different vibe.
So could these boutique banks actually shake things up? Could they challenge the dominance of those Wall Street giants?
I wouldn't rule it out. They're already giving them a run for their money, attracting some serious talent, winning over clients with their expertise, and, maybe a bit of that image of integrity.
It's like David and Goliath in the financial world. And, I'm always rooting for the underdog.
It's going to be really interesting to see how it all plays out, right? Will these boutique banks stay in their lane, or will they grab more of the market and change the whole game? No, that's the billion-dollar question.
Maybe something we'll have to revisit in another deep dive. This has been an incredible look into the world of investment banking, that's for sure. We've covered a lot of ground, from its history to the challenges it's facing today. Even got a glimpse into what the future might hold.
The pleasure was all mine. Thanks for having me.
And to all our listeners, we hope you've gained a better understanding of this fascinating and complex industry. Remember, knowledge is power, especially in the world of finance. Keep those questions coming, and we'll catch you on our next deep dive.